This is Jordan. This video is being recorded on the early evening of Friday, January 19th, 2024. Thank you so much for tuning in. In this video, just going to recap the week in gold and silver and the miners. And so getting into it, we have the weekly candle charts here, gold here, silver here. This for gold is the equivalent to the 200-day moving average right at 1980. And looking at these candles, I mean, going back a little while, we had the move to 2100, then the big bearish reversal, recovery here. Now it's selling off. I mean, these look like bullish hammers, but bullish hammers are most effective when you see more of a downtrend. I mean, this to me, it can evolve as a downtrend, but it's a little too soon in the downtrend. It's also not, I mean, they're not quite strong enough to really be considered bullish hammers. This is an example of you really have to understand the pattern, and you can't just go, oh, look, there's a bullish hammer here. Gold's going to go like that. So it's another example. I did the silver video talking about that. But anyway, so gold closed just a tick under 2030, which is support. There's also support at 1985 to 2000. Now you have the 200 days getting really close. That's probably going to hit 1985, I would think, in a matter of days. So that's, assuming gold will slip more below 2030, you're probably looking at the 1985 to 2000 zone as support. And then you also have this here, this next low, which is right below 1950. So if we get some more selling next week, then I would focus on this support here. But, the market is a little oversold, so you could, maybe get a little bit of a bounce to 2050 before you get more selling. Just a couple scenarios to keep in mind. Down at silver, silver continues to underperform. You can see silver closed at the low of the week versus gold actually had a recovery. That's just one example. I mean, we know that the gold-silver ratio is I have to check and see where that closed. Let me see here. So 2029.3 divided by 22.71. Okay, so it closed at 89. Not quite 90 yet, but the gold-silver ratio is pointing higher. But anyway, back to silver. So you do have this support here at 22. This, the equivalent of the 200-day. So silver's back below that. So the odds definitely favor a move at least down here to the 21 area. Below 22. And then you have this strong support, which is, call it 2030, 2040. So if gold loses 1985, probably going to see silver head down to this level. Now, here's the gold to the S&P 500 ratio. We'll talk about this more in the next chart, but this is the weekly, and it's not really a great chart. But here it is here. So this is gold against the S&P daily line chart. This is the daily candle chart for gold. So here we can see this support, which is just below 1950. Then we have the resistance here at 2090, or call it 2100. So it lines up pretty well here. Tested 1, 2, 3, 4, 5 times. So this is very significant resistance. So obviously, master of the obvious here. But I think that at least in the near term, gold's more likely to come down here than to break above 2100. Could be wrong, but that's just my feel right now. Big reason why is gold against the S&P 500. So this closed this week, I think, at a 17-month low. So not great, not good, to be honest. So this potentially, you could potentially see this come down to 0.38, maybe get a double bottom. You could play around with the S&P, and, if the S&P has another 10, 15% upside and it does a mini blow off, this can come down here without gold correcting all that much. But that's basically where we are right now. S&P makes a new high, gold to S&P ratio, new low, 17-month low. It's just not good. And just the overarching theme becomes more and more obvious. Until the stock market cracks, You're not going to get a real bull market in precious metals. We'll continue to talk about that over the days and weeks ahead. But closing out here with the miners, 2-3 weeks ago, I was talking about how this looked good. Then it failed. This is what fucking happens when you're, sorry for my lip, but you're in a fucking set. You're still in a secular bull. Excuse me. You're still in a secular bull for the S&P. So that's why every time things look good, you get these good setups and charts, and they're failing. They're just failing because there's not, you don't have new money and new people coming into the sector because they're just buying the SPY ETF and the 7 tech stocks. That's where all the money's going. You need the stock market to crack, and then those people are going to come in. They're going to buy gold. They'll buy gold stocks, bull market, blah, blah, blah. You know it. But anyway, so GDX in the last couple of weeks fallen below the 200-day here, and then I mentioned this last week, so it's below this right here. So this fledgling uptrend lost a lot of momentum, but, there is really good support here. So a little more selling. I would like to see a little more selling here. You could get a good bounce like that. Or the other scenario is you get a weak bounce like that, then you get a move down like that. So GDXJ closed at 33.89. That's off the low, so probably in the low 33s was the low. Here you can see strong support at 32.50. So again, I'd prefer to see weakness to start the week, then a reversal. You could get a move like that. But the other scenario is first there's more of a rally, then you get more selling. Same goes for SILJ, the silver ETF. That's all for this video. Thank you so much for tuning in. Leave a comment. Let me know what you think. Talk to you guys again in the next video.